What's going on, guys? My name is Richard. Welcome back to the channel. So today is actually the start of a new series I'll be doing where I'll be going through the charts of strong breakouts, true market leaders, and really analyzing them with a fine-tooth comb and trying to curate a library of winning characteristics that many of these charts share. And then the point of this is to kind of look for those same characteristics in the charts that you're putting on your watch list and ultimately buy. So the first stock we'll be talking about is DADA, and going over to MarketSmith real quickly, let's talk about the fundamentals. So overall, this is a very recent IPO, which is a good thing. There's a lot of room for growth. You can see it moved up from its first kind of consolidation here. And overall, it has decent, strong fundamentals. You've got revenue growth at 92%, 98%, 88%, then 95% this most recent quarter, although it isn't profitable. And you can see, looking at annual EPS estimates, that it's not supposed to be profitable this year or the next. And overall, apart from that revenue growth, it's not too strong fundamentally, but it is a China-based company, so there's a lot of room for growth, and it provides on-demand delivery and retail platforms. And it's very kind of underinvested in terms of institutions, and you do not have any high-quality funds in this stock. But really, the meat of this video is going to be analyzing this chart bar by bar and talking about kind of the different patterns and where you could have bought and why. So to start things off, I do want to first draw attention to how it performed versus the S&P 500. So here I've got the S&P 500 plotted down here. And if you want to know how to do that, all you have to do is go to S&P 500, add that to your chart. And then I also made it a line chart and also made it gray. So I think this is a handy thing to have, especially when you're looking for relative strength. And looking bar by bar, you can see that right after it IPO'd, the overall stock market hit a correction or a little dip here, and it kind of formed this first stage base, although this isn't quite a IPO base. And then it had its IPO advance phase increasing about 66% from that pivot here. And this would have been a very aggressive entry as it took out the highs of this tightness right here. And overall, you have a nice decrease in volume down here at the bottom, and then a nice increase in volume as it breaks out from this first price consolidation. And then you can see it starts correcting, forms its primary base here. And you can see that the S&P 500 really takes off in this time while it's kind of still forming out this base. And then the stock market starts to correct. And this is where it gets interesting because DADA actually increases during this time. You can see that reflected in its relative strength line. And also during this time, you can see it actually forms a higher low right here, while the overall market, the S&P 500, forms a lower low, which once again is a sign of relative strength. And this RS line, if you're not familiar with what it is basically the price of the stock divided by the price of the SPY, which is a stand-in for the overall market. The value itself does not matter at all, but the trend of it is very, very important because if it's increasing, the stock is outperforming that index, and if it's decreasing, it's underperforming. So anyway, during this corrective period, this recent IPO held up very, very well. So that's the first sign of relative strength. And then it forms a nice consolidation. We'll talk about the VCP here in just a second. And you can see the RS line increasing all the way to this point where it forms another short-term consolidation. And then last week, we had a very strong breakout on Friday. And I think it's up about 60% in just 4 days. So a very strong breakout. But there were clear signs that this could happen if you just go back and analyze the price pattern. And that's what we're going to do in this video. And if you do enjoy my analysis, please go ahead and leave a like down below. It does help me out and the channel. And subscribe if you're new, and looking forward to more videos just like this one every single week. So let me go ahead and hide the S&P 500 now. And let's talk through this chart. So as I said, it forms its first kind of buyable spot here on this bar. And then it increases during its IPO advance phase, but then consolidates as a lot of these IPOs do. And after this consolidation, a good point to be looking for entries is as it forms the kind of right side of the primary base, the IPO base, or not the standard IPO base by MarketSmith, but the IPO primary base here. And as it forms the right side, you can see it forms a clear VCP, decreasing 30%, then 20%, and then 15%, and then finally 8% during this last contraction, and then has a short move up about 32% before forming another base right next to the previous one. And if you're not familiar with what the VCP concept is, I'll probably make a whole video dedicated on it. But in short, it's a concept coined by Mark Minervini to describe the supply and demand characteristics of when a stock is under accumulation and wringing out the weak holders. So during each of these contractions, a lot of the weak holders are selling their stock while institutions are accumulating and absorbing that supply. And so by the end of these contractions, you've kind of gotten rid of all the weak holders and there's very little supply left for these institutions. So all it takes is a little bit of volume coming in to really skyrocket the stock. And that's exactly what happened. You can see that on this day, you have a breakout on high volume. And if you bought at the pivot, you could have placed your stop below the low of the previous day, about 6% down, which is a reasonable stop. And then you know very quickly if the setup has failed because it would reverse down on higher volume. But instead, we get a nice move up for 30% before it pauses and consolidates on lower volume. So let me draw in this right here. So while a stock is consolidating like this, you want to see a decrease in volume from left to right during the VCP or other standard base like a cup and handle. And you saw this characteristic at least 3 times during this run. You've got a first VCP around here. It decreases 40%, which is a little bit high, then 18%, then 6%, fails this breakout, but you can see the volume was there, the price contraction was there, so it just needed a little bit more time to wring out those weak holders. And then you have the second VCP, which yields a 30% gain in just a matter of days. And then very recently, you have a kind of 2 contraction VCP, down 25% and then down 12%. But I think that the reason that this last one worked so well and yielded a gain of about 60% in just 4 days is because you've already gotten rid of a lot of the weak holders during this prior consolidation. So I think this would have been a very opportune moment to buy, and you could have gotten in off the pivot above the high of 11.13 or above the standard pivot, which would be at about 37.38. So I think the overall main takeaway for me from looking at this chart is to look for VCP characteristics on the right side of an IPO primary base. I think that's a great setup. You can get in before the breakout and it can advance very, very quickly once it breaks above that IPO high, which this one set at 34.94. And the other interesting thing that I've noticed with regards to these winning stocks right before they break out is that they are often very tight intraday. And let me actually go to a 65-minute chart and I'll show you guys what I mean. So overall, during this VCP action, it's pretty tight, especially during this last contraction. And then you can see the huge volume coming in intraday. And then even as it pulls back, you can see that it moves during the first hour and maybe the last hour. But intraday, it's pretty darn tight and it's very orderly as well. And then you can see that continues during this period right here. And then as it sets up once again, it forms the pivot on this day right here, the 13th, and then goes very quiet. And right before the breakout, look how tight this is intraday. I noticed this in Tesla as well during the breakouts and right before. And then when it breaks out, you can see it either moves up or goes sideways, moves up or goes sideways. It's often very, very tight because institutions are just absorbing any selling that's occurring. And the moves up and down really occur during the first and last 65-minute blocks. So if you are looking at a stock that might potentially break out, you think it's setting up well, take a look at both the weekly, daily, and intraday timeframes and try to identify any tightening, coiling, because it could indicate that institutions are really absorbing any supply that's coming to market, and it could mean that it's ready to really rocket up very, very soon. And that's pretty much it for the video. Thank you guys so much for watching. If you did enjoy, please go ahead and leave a like down below and subscribe if you are new. Happy Thanksgiving to everybody, and I'll see you guys in future videos.